So I want to be a part of that 10%. I want to know how to avoid getting chopped up and then potentially going into tilt where I don't know how to stop myself. Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy traded video. Yo, what's good, y'all? Let's get right to the business. You feel me? I'm gonna go ahead and go right to the pre-week market analysis that I have for this week, right? Let's just go ahead and start off with dollar, right? So dollar, I was looking for dollar to be bullish and start going towards these daily highs, right? Because we're coming from this fair value gap right here, this bullish fair value gap, right? And we're holding the 50% of that. And we were also holding the 50% of this inversion FEG right here, right? Even though we didn't completely close through it, we're still holding that, right? So I was thinking bullish dollar, right? Bullish dollar. You could look at the hourly time frame, right? I drew out this inversion fair value gap, wanted to see it go above that, use that, continue higher, right? Right. So bullish dollar. All right, that's what I was looking for. So since I was bullish dollar, the reason why it says neutral bullish dollar here is because the Fed is thinking about cutting rates. They've been thinking about cutting rates further during December. So there's expected rate cuts December, and they also today there were latest statements or leaks before October 28th meeting likely confirmed or hinted at sooner than expected rate cuts. So that's why we had this huge ass bull run, well gap, not bull run, gap on the indices. So we have a huge gap, right? So even though I was neutral bullish dollar, right, I have to anticipate dollar to maybe possibly be weak because of those expected rate cuts, right? So now that that's happening, right now I'm kind of neutral bearish dollar and more so leaning on bearishness on dollar, right? So let's go ahead and look at the rest, right? So since I was neutral bullish dollar, right, I was also actually neutral Euro USD, but also taking into account that those rate cuts can happen. So Euro USD could be bullish, right? Open, come down, go higher, but right now it's not showing that right now, right? So looking at the hourly time frame, like I wanted to see these FEGs stay here, but looking at buy side liquidity run, right, maybe go lower, right? If they don't, since the rates were already kind of priced in a bit, maybe they don't continue to push euro higher and they could push it lower. But now that there's expected rate cuts to be sooner, possibly, potentially, euro may continue to go higher. So this kind of like trumped what I'm looking at right now. So I could put neutral bullish, right? So this is my trading journal. This is how I'm kind of keeping data and keeping track of what I think price might do, right? So daily time frame, if you look at GU, right, I was neutral bearish GU because of it potentially having those rate cuts, right? So since I was neutral bearish, you can see how there has been down close candles consistently, daily closes, bearish daily closes. So I was thinking maybe the next it could open, come up, and continue down lower, right, and play more within this discount fair value gap, right, which is a new week opening gap. So I was looking for this to potentially hold, and then maybe I could take a bearish setup, GU short term, to get down to these previous daily lows and shit, whatever, right? But if we started to close through, let me tell you, consequent encroachment of this FEG, which is like the middle, right? If we started to close through there and close through this whole thing, then it kind of like shows me that GU is gonna be a problem running lower, right? So here we go, 15-minute time frame, right? So there we go. So that's what I was looking at. Essentially, I don't know what's gonna happen for this week. I know it's gonna be kind of weird because we do have FOMC Wednesday. So FOMC, the days before is kind of gonna be choppy. It's not gonna be an easy read. I'm really not gonna know where price is gonna really go with high probability until this FOMC gets released, right? And then you also have CPPI Friday, which is okay to trade. PMI Friday, okay to trade. It's gonna Wednesday after Wednesday FOMC, Thursday and Friday should be cleaner days to trade. So that's why I'm kind of waiting for today. No trade day. I'm not gonna trade today, right? And then let's look at Nasdaq, right? So this is what I was looking at before the gap opened, right? To be bullish, right? Previous daily highs. And since there is going to be expected rate cuts, right? And usually with seasonal tendencies, these October usually sets up a bullish November. So if October's super bullish, right, then a lot of the time November is bullish as well with seasonal tendencies of the indices, right? So easy draws, bullishness, previous daily high, previous weekly highs, right? I was looking at this fair value gap right here. Sorry for the lag. This fair value gap here to see price run down into and continue up higher, right? Especially because this is the I think it was the CPI candle right here. So I wanted to see price maybe come down into there, maybe even run the CPI low and then start continue higher. I think that's a possibility. Notice how we created relative equal highs, relative equal lows here. I drew this up here, but I'm leaning more so bullish. I'm not trying to call the top on this market. And let's go to show you guys why, bro. I'm not trying to call no top on this market, even though we're at all-time highs. It's smart money. It's the smart money mindset is to short from here and to try to call the top from here. But to be honest with you guys, it's not smart for me to call a top on this market, even though yes, we have gap risk, right? We have this huge gap here because it gapped up so high. Notice how I marked out the new week opening gap, consequent encroachment, and then marked out the quadrants, right? But even though this Asia low is here, in my mind, I don't want to try to call this top to get down into London lows and all these lows because of the fundamental driver that's driving price right now is those early expected rate cuts. And as well, I'm not really looking to really be bullish right now. I mean, yes, there's buys that's happening in here, right? But I'm not gonna be a buyer at all-time highs with this big ass gap here. That's gap risk. You know what I'm saying? So I'm not trying to position myself in early to get burnt. You know what I'm saying? For price to potentially pull back and fill in that gap, and then not have to reposition myself and have to eat up some losses because I got in too early. Smart money is not really going to try to position themselves in this early, especially when you have the Fed interest rate decision coming up Wednesday. So the days prior, smart money isn't really looking to position themselves in because of that, right? Because of gap risk, because we're at all-time highs, I'm not gonna be bullish. And then trying to call the top here is kind of, it's hard to do that because you have this fundamental driver driving price higher. So when you look at price, right, all we did was hold London low, hold Asia low. We ran out 7 o'clock a low here, right, during 9:30, and then all 9:30 did, even though it looked like it could have went lower from here, it started chopping around still to continue to press higher. And even though we ran out highs here, look, notice here, we ran out highs here on ES, right? And then we have these relative equal lows here. There's SMT here, right? And then you have that Asia low there, right? Look how you could have got chopped up back and forth inside of this FEG, thinking that this is an inversion FEG. Yes, it could work out. And while I was watching price here, I'm like, yes, this trade could work out. This looks beautiful to take. But what's driving price right now? You know what I'm saying? Why are we getting this type of high resistant liquidity, high resistant ass run booty cheek price action, dookie cheek price action? Why are we getting this? Because Fed interest rates is Wednesday, right? And the days prior is most likely going to give you this type of price action, right? So with that being said, that's why I'm not positioning myself in. Yeah, and when I look at YM, there is SMT here, and I do see this run happening toward lower. I think YM is going to be a little bit of a run lower because there's SMT at these highs here. So maybe this could have gave you a cleaner run. Look how they leave that FEG open, but at the same time, like I said, I'm not in no rush to get into a trade until the feds happen. Especially because listen, last week, bro, was a break even week. Right now I'm break even on the phase two account. Why would I put on risk, right? Logically, why would I put on risk on a day like this, on a day where it's most likely gonna be booty cheeks? You know what I'm saying? Just to take a loss, and now I'm down on the phase two. You know what I'm saying? When I could just wait for a much more high probability setup that gives me a lot more conviction. You know what I mean? So yeah, there's no trades there. Nasdaq constantly trading up. Let's go to dollar, right? So dollar, right? That dollar analysis, right? I was looking at those daily highs, which was right here, right? Right here. Okay. Now, even though we're expected, they say there's a leak on expected early than expected rate cuts. That means dollar should be bearish. But right now, dollar isn't showing that. It's holding this fair value gap, right? We have relative equal highs. I think after we possibly take out those relative equal highs and then we start running lower in CSD and all of that, then maybe dollar can start going lower. But I think that's going to be after the rate cuts. I mean, after the Fed comes out with their data, that's when we're going to start getting expansions and start getting the runs that price. That's when price is going to actually start running to where the draw is, right? Until then, I can anticipate consolidation, which, as you can see, this is not an easy read on dollar, right? Even though I can anticipate this to go higher, take out the buy side liquidity here, buy side liquidity here, it can run up there for all I care, right? I can anticipate this to potentially be ass, and look how I left relative equal lows here, right? Why would I position myself in a buy here with relative equal lows there, right? You don't know where it's gonna go. It could consolidate all through here, drop lower because dollar is expected to drop and get weaker, but it's not right now. You know what I mean? So, you know, I'm kind of it's just a sit on your hands type of deal. And then when you look at GU, on GU, this was the FEG that I had right here, right? 50% of that, boom, right? The 50% is kind of right here around new week opening gap, right? The current new week opening gap, opening price, right? So it's right there. Notice how we traded above it, traded through it, traded all through this fair value gap. So what can I anticipate? This to not be a low resistance liquidity run going lower. This is gonna send price lower easily. Prices are gonna go lower easily. It could easily use this as support, climb up, then drop back down and do all type of shit. You know what I mean? EU, same thing. Like EU's high resistant going up, right? Yes, we left some of this fair value gap open. I think EU can potentially continue to go up. When you look at that daily chart, look at what we're dealing with. We're dealing with this fair value gap. We're dealing with price back and forth, back and forth, back and forth. You know what I'm saying? It's not an easy market to read right now. The only thing that's easy to read is NASDAQ before it gapped up like this. So now you're dealing with gap risk. So I am bullish ES, I am bullish NASDAQ, but I have to wait until I could position myself in at a discount, right, to go higher. And I don't think that's going to happen. I don't think easy runs are going to happen until that Fed interest rate gets dropped. And then Thursday and Friday should be easy reads on the drawn liquidity, easy runs, low resistant runs. You know what I'm saying? It should be that type of deal. Even PM session after the FOMC should be easier to read. But right now, I gotta just let price do what it's gonna do. And this is something that a lot of traders, like I said, because I dropped a video, you gotta know when not to trade, and this is the part that I'm really trying to work on, because this is what traders want to learn. They want to know how to get into a trade. You know what I'm saying? How to position themselves into a trade, not when to stay out. You know what I mean? And I think that's what separates the 90% from the 10% that win. You know what I mean? So I want to be a part of that 10%. I want to know how to avoid getting chopped up and then potentially going into tilt where I don't know how to stop myself, and then I go to the no point in return, and then and then I lose all the progress that I've been working on, all the discipline, all the disciplined days that I've been going through, which takes time, which is time, right? Time off my life. You know what I'm saying? All those disciplined days going to shit because I let one day fuck me over, and I could have stayed away from that day. Even when the market isn't, I'm trading and losing my shit on a day where it's not even poised to run. It's not even high probable. You know what I mean? So that's what I'm trying to learn, bro. That's what I'm trying to install my discipline within these days, to where I don't press a button. You know what I mean? And force something. Because right here, it's a lot of traders that's probably trying to force this shit to go wherever they want to go. But I know that this is what leads to failure. You know what I mean? So my plan is going into this week is waiting for the Fed to drop, and then Thursday, Friday, I shoot my shots. Today, I was thinking about shooting a shot today because tomorrow is gonna be very more low probable than it possibly is gonna be today, because the Fed drops their interest rates Wednesday, the interest rate decision Wednesday. So usually the day prior is gonna be super dookie cheeks. So that's why I was thinking that maybe a trade could happen today. But when you look at the market condition and then what was driving price, why would I call a top here? And then why would I buy here when there's gap risk all in here? You know what I mean? So yeah, bruh. I'm not trying to be a teacher or anything, bruh, but I'm just trying to lead by example. You know what I'm saying? A lot of people, they like to talk and try to teach, and bro, I'm trying to show you by example, not just from what's coming out of my mouth. Show you by example. You know what I'm saying? And even show myself in that discipline. Show myself that I have that discipline to do this. You know what I'm saying? Over time, when I look back, you know what I mean? So yeah, man. That's it for this video. If you guys enjoyed that little breakdown, that pre-week analysis, smash that like button. If you're new to the channel, sub to the motherfucking channel. You know what I'm saying? But yeah, I'll catch you guys during this week. Peace. Be safe.